Good morning, everyone, and welcome to the 2021 Manitoba Protein Summit session, Attracting Investment in Protein Innovation and Technologies. Thanks for joining us for this session. I'm Maurice Bouvier, Assistant Deputy Minister for Manitoba Agriculture and Resource Development. My portfolio includes investment attraction, value added, and industry development in the agriculture and resource industries, and includes assurance systems that support agriculture and food, including food safety and animal health and welfare. My colleagues and I directly support the Manitoba Protein Advantage strategy through the division that I lead. I want to remind everyone that this is a pre-recorded session. If you want to ask our speaker a question, you can use the chat box on the right side of the screen to ask those questions. So let's talk about attracting investment. In the Manitoba Protein strategy, we've set $1.5 billion as our goal for new protein processing investment through 2025. There are many factors that will contribute to new and expanded development of the plant and animal protein industries. For plant protein, certainly research, innovation, and new technologies are critical for product development in what's a very dynamic market. The challenge for many is taking their intellectual property generated and finding the right fit, and often the right set of partners to realize a vision, whether they're a business producing equipment, ingredients, and finished products. For animal protein, innovation from feed to processing automation to cold storage and handling may bring product characteristics that facilitate entry to markets and stand out in the marketplace. Capital is needed at all stages of the innovation continuum. Many times, innovators and entrepreneurs seek capital backing to take the idea from perhaps the lab bench to pre-commercialization to commercialization and the growth stages. So in the past, Manitoba has been a relatively low profile province to venture capital and non-traditional financing groups. While we need to raise the profile of Manitoba, this province has been gaining international attention through high profile investments in plant protein and through continued growth and innovation in the livestock industry and the animal protein processing industry. Without options and channels for investment, great ideas, technologies, and products will not see the light of day. So now it's my pleasure to introduce our speaker for this session, Abby Lyall. Abby is a vice president at Big Idea Ventures, a global venture fund solving the world's biggest problems by backing great entrepreneurs. She focuses on Series A+ investments in companies solving the issues of food waste, plastic pollution, water waste, and greenhouse gas emissions, as well as commercializing university IP in the food and agriculture spaces. Prior to joining the Big Idea Ventures team, Abby was the second employee at Quake Capital Partners, where she worked with over 70 early stage companies across industries. Abby holds a degree from New York University Stern School of Business. So I want to say welcome and good morning to you, Abby. Welcome to the Protein Summit, and I'll hand the virtual mic over to you now.
Thank you, Maurice, for that kind introduction, and thank you to the team at the Manitoba Protein Summit for hosting me. I'm really excited to be here to talk to you all about ways to attract investment in protein innovation and technologies, as well as some trends that as an investor I'm seeing in this space. At Big Idea Ventures, we are, as Maurice mentioned, focused on some later stage investments solving those key challenges relevant to sustainability in the food system. But we also have an early stage fund that is focused on innovations in alternative protein, including plant-based and cell-based alternatives to meat, dairy, and seafood. So I've worked with a lot of early stage companies in this space, and hopefully there'll be some insights in this presentation that you find valuable as you head out to raise capital. So the alternative protein space is taking off as an avenue for investment. In the first half of 2020 only, alt protein companies raised $1.5 billion globally, which was more than the amount raised in the entirety of 2019. The market for plant-based alternatives to meat and dairy and seafood products is only expected to grow faster, with a projected CAGR of almost 12% from 2020 to 2027. There are a few key tailwinds that are driving this trend in increased investment in the alternative protein space. COVID-19 has really shown the population, both consumers and investors, that we need to be more focused on our health and also more aware of climate change and what is going on our planet. So the COVID-19 crisis, contrary to being a headwind for investment as it was in many other industries, has caused there to be a renewed focus on investment in this space, and many more new strategies employed by both large corporations, small startups, as well as VC funds to driving change in the food and agricultural system. This is a graphic that'll give you an idea of just how much venture capital investment in the alternative protein space has increased over the last decade. As you can see, from 2010 to 2013, there was very little investment in the space. And then in the past few years, alternative protein investment from venture capital funds has really ramped up, both in terms of deal count and capital invested, according to data from PitchBook. Now, what are the trends that VCs are seeing in this space? And what are the protein categories that venture capitalists and other investors are most interested in funding? Obviously, not all protein companies are created equal. I'm going to highlight 3 key spaces where I'm seeing not only a lot of great innovation, but also a lot of investor interest in putting dollars to work. The first is microbial fermentation. Microbial fermentation is the use of microbes, for example, specific types of bacteria, to produce ingredients that have specific functional, sensory, or nutritional profiles. This isn't an old technology. We've been using microbes in food and beverage processes, for example, beer and bread making, for thousands of years. However, its use and application to alternative protein is relatively new and something that investors are really excited about and really interested in investing in. $827 million of VC capital has already been invested in microbial fermentation since the start of 2019, and this number is only expected to increase. Microbial fermentation can be used across a wide variety of different applications in the food space. Some companies, as an example, that are using this process include Perfect Day, which is using microbial fermentation to get alternative dairy products to perform similarly to traditional dairy products. Clara Foods, which is using the same application for eggs, and Impossible Foods, which uses microbial fermentation for heme, which is one of the key ingredients in their alternative meat products. Another area in which, as an investor, I'm seeing both a lot of innovation as well as a lot of investor appetite is enabling technologies for the cultivated meat space. For those not familiar, cultivated meat is the process of taking animal cells grown in a lab and making them into an animal product that is cellularly identical to the existing animal product, but doesn't use any live animals in the process. 3 key barriers to the growth of this space include scaffolds, growth media, and scalable bioreactor technologies. Edible scaffolds are very important to the cultivated meat space because they are what gives cultivated meat its structure. Lots of scientists have figured out ways to grow and culture animal cells in the lab, but in order for the product to look like a steak or look like a pork chop, there's going to need to be a plant-based, edible, non-harmful scaffold that the cells can lay on top of in order to give the meat that structure. Innovation in this space is an area that I see developing significantly over the next few years and also attracting a significant amount of venture dollars. Another big issue the cultivated meat space faces is the lack of cheap and ethical growth media sources. In order to cause the cells to grow in the lab, scientists use something called fetal bovine serum, or FBS, which is unethical because it is harvested from a baby cow, and it is also very expensive and one of the key cost drivers that makes cultivated meat be significantly more expensive than conventional and plant-based alternatives. Many companies today are working on plant-based, cheaper ways to grow cells in a lab, and this is another area that I'm anticipating seeing a lot of innovation and investment in the future. Finally, in order to produce cultivated meat at scale, large scalable bioreactor technologies will need to be developed, and this is also another area of interest that I see in the investor community. Finally, unique plant-based ingredients are also an area that I see a lot of investment and development trends occurring over the next few years. Many plant-based ingredients that are currently employed in alternative protein products have a variety of different challenges that they're facing. For example, soy has a large portion of the population that are allergic to it. Almonds require a lot of water and are not always sustainable to harvest. And pea protein, while it doesn't have any allergen or environmental challenges, doesn't taste very good and requires a lot of additives and additional ingredients in order to mask the taste and the flavor in an alternative protein product. Some alternative ingredients that I think are going to really pick up as far as innovation and investment include seaweed, kelp, and other products that are farmed using the ocean through mariculture technologies. These seaweed, kelp, and algae plants are very nutritious, and they're also very environmentally sustainable. We've seen a lot of companies innovating in this space, both in mariculture farming technology, as well as in extraction of proteins and nutrients processes from seaweed and kelp. And this is a huge white space that I think could use a lot more innovation and a lot more investor dollars. Another key category of unique plant-based ingredients that I expect to grow significantly is the use of pulses. This family of plant contains a lot of well-known ingredients, including fava beans, lupini beans, and chickpeas. I expect products containing these ingredients to grow in both consumer popularity as well as attract increased amounts of investment. Finally, hemp is somewhat of a wonder plant in the alternative protein space that, in my opinion, has been significantly overlooked. It's well known today for its THC and CBD properties, but what is less known is that hemp is also carbon negative in terms of its production. So those companies that harvest and farm hemp actually reduce their carbon footprint through doing so. Hemp, not only that, hemp seed oil is incredibly high in protein and nutrients, and the hemp plant itself, the fiber is incredibly strong and could potentially be used as a sustainable alternative to single-use plastics in packaging for a lot of alternative protein products. So hemp is a category that I would like to see significant growth and development in the future, both for health and climate's sake. There are several key categories of players that are investing in the alternative protein space. I'm going to talk about 3 of those groups today. The first is venture investors. On the screen, I've put a variety of different logos of firms that I've worked with and that folks at my fund have worked with that are leaders in the space. Outside of our fund, Big Idea Ventures, as well as some other specialized funds in the space like Veg Invest, New Crop Capital, and Stray Dog Capital, mainstream venture capital funds like NEA and Coastal Ventures are also starting to get into the space. Not only is alternative protein and protein innovation going mainstream from a consumer perspective, it's also going mainstream from a venture capital investment perspective. So this is a trend that I anticipate seeing more in the investment space as well, is more conventional funds like NEA and Coastal making larger and larger investments in this space and allocating more of their portfolio and more of their dry powder towards investments in this space, even if they haven't been food and agriculture investors previously. So hopefully for those new to the venture space, this list of folks will give you an idea of some people to research and some folks to reach out to if you're looking to raise capital for your alternative protein business. Strategic investors are also another major source of capital in this space that I feel like early stage entrepreneurs often overlook. Large food corporations have not missed the boat on protein innovation at all whatsoever. While a lot of protein innovation is coming from entrepreneurs and early stage startups and coming out of labs, research centers at large food corporations are also really picking up the pace as far as their investment. Not only are these companies releasing their own lines of alternative protein products, but they're also investing in and acquiring other promising startups in the space to bolster their protein innovation portfolios. On the screen are an example of companies that I know are active in the space. A decent amount of them, such as Tyson and Givaudan, are investors in our funds at Big Idea Ventures. Some of the others, such as Kraft and AB InBev, have their own venture arms that they use to invest in funds. PepsiCo recently just announced a great partnership with Beyond Meat to increase investment and development and innovation in the alternative protein space. So I'm personally really excited to see what more new and innovative ideas come out of large corporate boardrooms and seeing how these strategic investors can drive innovation in this space forward in the future. Finally, governments, universities, and nonprofit organizations are not to be overlooked when it comes to raising money for a protein alternatives business. Non-dilutive funding is one of the most overlooked and underappreciated sources of capital, particularly in the early stages of a business life cycle, in my opinion. There is a lot of money to be raised without giving up any equity in your company. For example, the National Science Foundation can provide grants over $1 million for startups developing in this space, as well as across a wide variety of other scientific disciplines. The Good Food Institute is one of the leading nonprofit organizations in this space, and one that I would definitely recommend getting involved with and reaching out to if you are a scientist or an innovator in the space that is looking to meet business leaders or investors. The Good Food Institute specializes in this, and I would definitely recommend getting in touch with them and getting involved in their programs. Finally, a wide variety of different universities have food innovation labs and food development centers where folks can produce their product either at a lower cost or often free of charge for folks coming out of that university or developing their products at the university. For example, North Carolina Food Innovation Lab, which is one of our partners at Big Idea Ventures, they have an incredible test facility where they create new plant-based products and manufacture them in small batches and test batches in order to help small startups get their products off the ground. So there are lots of initiatives like this at universities all across both the United States and Canada, and focusing on this sorts of non-dilutive funding is very accretive to companies across the globe. Non-North American markets to watch. So obviously Canada and the United States are incredible markets for alternative protein, both from a consumer standpoint as well as from an investment standpoint. However, there are lots of markets in other parts of the country that I think are important to be watching as well. Israel is an incredible market for food and agriculture technology development overall. A lot of the great innovations that we've been seeing in this space have come out of Israel, and they have an incredible university and governmental funding system as well, similar to what I mentioned with the other universities on the last slide. Israel has a really state-of-the-art public-private partnerships as far as development. So if you're based in Israel or considering relocating there, I would highly recommend looking into the government grants that they provide as well. China is, of course, a massive consumer market, and they have a significantly growing middle class, which means demand for protein is only going to increase in China over the next few decades. So companies that can capitalize on this increased demand, OmniPork is one, as well as many different fast food chains in China are starting to also adopt alternative protein products on their menu. So China is definitely going to be a market to watch, as well as many other countries across the APAC region. Singapore is another country in the APAC region that is very active in this space. Temasek Holdings, which is their government investment arm, has deployed a lot of capital in this space. Singapore also made history as the first country to give regulatory approval to a cultivated meat product just under a month ago, which was very exciting and a development that I hope many other countries follow suit in. Finally, India is another really great global market to be looking at, in my opinion. Not only do they have a very large population, but they also have a lot of vegans and vegetarians, which drives the demand for alternative protein across the entire subcontinent of India. Finally, a few tips for closing a deal once you are in the room and the meeting with a venture investor. The first is having a differentiated technological moat. So there are a lot of companies out there that are building really incredible consumer brands in this space. particularly in a lot of categories like alternative milk, protein bars, jerkies. There's already a lot of competition for being the leading brand in the space. And new startups will need to spend a lot of money in order to defend their brand and build a significant moat around the brand. A big trend that I've been seeing in investor circles is wanting to also see some sort of technological advantage as well as a really strong brand. So whether this is a patent protected technology or just a really strong trade secret, both of those can be really strong technological moats, but it is really important to be doing something different on the product formulation side and the technology side if you want to really show investors that you're different and that you're the player that is worth backing. Putting the right team members in the right places is also very important. It is not enough to just have the right folks on board. You also need to have them in the right roles. So for example, having somebody as the CEO or COO that is very knowledgeable about business operations, having somebody as the chief science officer or chief product officer that is very knowledgeable about the inner workings of your product, and then having folks in sales and marketing their experience in those areas. Having the right people in the right seats is not to be underestimated as one of the key ingredients for success, and is absolutely something that investors are going to look for when they're meeting with you. Understanding the investor is very important as well. What is this investor's underlying motivations? If they are a venture investor, they're probably going to be motivated by very large returns and fast growth. So make sure in your pitch, you're showing how you're going to deliver that. If they're a strategic investor, they might be more motivated by what synergies there are between your company and their firm. So make sure you focus on that in the pitch. If they're a nonprofit or a governmental organization, they might be focused on a specific region's economic development or the advancement of a specific cause or opportunity. So make sure you focus on that in your pitch. Having conversations, real genuine conversations, and building relationships is very important when meeting with investors. It's not about having the perfect pitch or selling your business so much as it is building a long-term relationship with the investor that will last over time. Whether or not they put money into your round today, they might still be very accretive to you in the future, whether it's introducing you to other investors or bringing in the right strategic partners to help you grow your business. Finally, be patient. Fundraising always takes twice as long as you expect it to, and you always need twice as much money as you think you're going to need. Expect to hear no lots of times, don't take it personally, and continue throughout the process optimistically and with a smile on your face. Thank you very much for listening to this presentation, and I am now open to any questions that you might have.
Great, thanks, Abby. I'll start off with some questions, and then we'll go to the live questions just a bit later. How much will jurisdictional advantages such as renewable energy, clean water regulations, and other similar issues play a part in landing investments? Should these be at the forefront of a marketing strategy or secondary in a strategy?
So I definitely think that the policy responses that different governments have will really dictate attracting investment as well as attracting innovative entrepreneurs to those geographic areas. So I absolutely think that's important. As far as playing it up in an individual company's pitch, obviously a company can always relocate, a company can always enter new markets. So I think it's less important if you're an entrepreneur, it's a little bit less important to play that up in your personal pitch. But as far as, do I think that jurisdictional advantages are going to drive advantages for different countries and different localities? Absolutely. I think that's going to be one of the major factors that attract both innovative entrepreneurs as well as investors with a lot of capital to different geographic regions in the future.
So do you think there's value in a jurisdiction like Manitoba connecting with these venture capital groups to provide them that kind of background on things that are important to our jurisdiction as a place to invest, but also to talk about our policy framework around protein?
Absolutely, absolutely. I think a big trend that we've been seeing, and COVID has been driving this too, is the move away from Silicon Valley and other cities that were traditionally the only place or one of the few places where venture capitalists really operated. I think we're really seeing interest in locations like Manitoba or the Midwest and South in the United States as being of great interest to venture capitalists. And I think folks on the coastal areas of North America are beginning to see the value in areas in the middle of the country and realizing that they've been leaving a lot of great money and opportunities on the table by overlooking some of those areas. So that would absolutely be a strategy that I would recommend.
So I mentioned in my opening remarks about Manitoba being, pretty much an unknown in the past, as far as venture capitalists were concerned. So how do we, aside from, our policy framework or, some of the profiles of investments that have been made in our province, how do we stand out in the crowd from the rest of the world or from, our country or North America when it comes to attracting investment?
So I think having a few really high profile wins is super helpful. Folks are really driven by what they see in the press. So getting even just one really high profile company like a Beyond Meat or an Impossible or a Just that stands out as a huge innovator in the space and gets a big return for their investors or has a big exit or launches a big new product. In my opinion, that would really put Manitoba on the map. I think it's great to have a great network of a pipeline of early stage startups. That's super important as well. But venture capitalists are a little bit like lemmings sometimes, where everybody wants to pile into the big deals that are super popular and are making the big headlines. So I think getting even just one really big player that can make a splash in the press and attract an investment from an NEA or some other really big venture capital firm like that, I think that'll get folks to really start realizing that Manitoba is a powerhouse in this sort of thing and understanding that there's a lot more where that came from.
Our province is certainly building really starting to build on plant protein and with some high profile investments, but we're also an animal protein producer as well. That's still a major source of value and likely will remain so into the future. How do you work alongside with those companies that are looking to invest in plant protein, while at the same time in a jurisdiction that is also strong in the animal protein side?
My perspective on this is there is a lot less animosity globally between the plant-based folks and the animal-based folks than it seems through the media. For example, our fund is only focused on plant-based and cell-based. We don't invest in any conventional animal protein, but our anchor investor is Tyson, who is obviously one of the largest protein producers in all of North America. So I think you're really seeing a lot of willingness, both from the conventional protein side, like the Tysons and the JBSs of the world, to work with the plant protein folks. And you're also seeing a lot of willingness on folks that on the part of folks that want to drive alternative protein investment to work with the big players, even though animal protein might be a big component. Because at the end of the day, what we're really trying to do is drive systemic change to ensure that we're able to feed our growing population and we're able to do it in a sustainable way that keeps our planet a good place for everybody to live. At the end of the day, that's what everybody wants. At the end of the day, folks on both sides of the aisle, whether they're innovating in animal protein or plant protein or cell-based protein, everybody wants the same thing and everybody is working towards that goal. In our later stage fund, we do some work on the animal protein side as well, and we look at some technologies in that area. And all of those farmers are looking to develop more sustainable practices. Regenerative agriculture is huge. There's lots of ways that the animal agricultural industry can contribute to a climate positive future and one that's healthier for our planet and our people.
And just building on the previous question about animal protein, are you seeing interest in blended animal and plant protein products and companies that are looking at at that space as kind of that bridge between either plant or animal proteins?
So Tyson was kind of the biggest pioneer in this space. They had a line called Raised and Rooted that was half plant protein and half animal protein. In my opinion, and I don't know if that's inherent to a blended product or if it was just the marketing reception to this particular product, but it seemed to be a bit confusing to consumers. Obviously, vegans and vegetarians don't want to eat it. And then the folks that were, would eat are flexitarians seem to be a little bit confused by the messaging, and Tyson did end up discontinuing the product. That being said, I have seen a big trend towards blended products among the cell-based folks because their product is very expensive. So for example, Future Meat got their cultivated chicken product down to $7.50, which was a really impressive milestone for a cultivated meat company. The original cultivated meat product in 2013, I think, was something like $200,000. I'm probably misquoting that number, but it was something very, very large like that. So to get that price down to $750 is a really incredible feat. And they did that by blending it with plant protein and blending it with plant products. So I think the cell-based side, we've had some folks try to do the blended products and it hasn't gone over too well in the past. But I do think that as the cultivated meat space grows, we're going to start to see more innovation in that area and more consumer acceptance in that area.
What about interest on the insect protein side of things? Are you seeing that kind of interest in the North American market? Among venture capitalists. What advice can you provide us on what some of those trends are?
Yeah, absolutely. I think the insect protein space is huge personally. It's not something that we invest in at BIV. We don't invest in any animal protein, so insects count as an animal. But it is a trend that I'm seeing overall in the market. I think black soldier flies specifically are a really great species that I'm seeing. I'm seeing a lot of innovation in black soldier fly farms, both in North America, but also in Europe. I've been seeing a lot of really great innovation coming out of Europe in the space as well. And I think black soldier flies are one of the more promising species, both in their protein content as well as their ability to be farmed sustainably.
I'm wondering about return on investment for venture capital firms, and I know that this would vary and their terms would vary. But what type of returns do typical investment or venture capital investors look for, and time frame to enter and then exit from a company?
Sure. So both of those things are very stage dependent. It obviously varies a lot depending on whether you're a seed stage company versus whether you're a growth stage company. So if you're a seed stage fund like ours, we're generally looking at a 7 to 10 year time horizon to exit. Obviously, if you're a later stage investor, it might be shorter, more like 2 to 3 years or 5 years or so. And returns vary as well. Obviously, if you get in earlier, you're looking for a significantly greater return on your investment versus if you're getting later. In general, the 80-20 rule is a good one to look at as far as venture returns. So particularly for seed stage funds, we're expecting the vast majority of the companies we invest in to fail. So 80% of our returns are going to be driven by that top 10 to 20% of companies. So what we're really looking for, every company that we invest in needs to have the capability to 10 to 20x our investment. So that means multiply it by a factor between 10 and 20 times. Are they all actually going to do that? Of course not. The vast majority of them are going to fail, and we still need to make money. That's the precise reason why that incredibly high return profile is necessary. A lot of them will return much smaller multiples. We've had some exits at both funds I've worked at. We've had some early exits that did a 2x investment, 2x times or 3x times. Those types of wins are great. Any type of win is great. But we're really looking for those 1 or 2 companies that are going to have hyper fast growth and over the next 7 to 10 years return, 10 to 20x or 10, 20x our investment, because that will make up for the rest of the fund that fails largely or returns a lower multiple.
Okay, Abby, can you talk about venture capital group interest in investing in sustainability technologies, and whether that's on the animal or the plant protein side of the ledger?
Absolutely. I think there's lots of great opportunities in the investment space to invest in agriculture technologies that are making traditional animal protein, more sustainable as well. For example, greenhouse gas emissions are a massive problem for the conventional agriculture industry. We've been seeing some incredible companies working on that with feed additives. For example, certain strains of seaweed that cause cows to belch 90% less methane. I had no idea that was even possible, but that one, I think, the technologies like that, I think are going to be really great for making the animal protein production process more sustainable, as well as we're seeing a lot around animal health and animal welfare as well. That's something that consumers are becoming increasingly concerned about, wanting to know that the animal they're eating didn't experience pain. So technologies on that end, as well as worker safety and food safety, I think are very important as well. So additional bacteria detection and pathogen detection technology is a big one to combat foodborne disease outbreaks, as well as making sure that meatpacking plants are safe for all those working there. I think that's been a big issue with COVID, and that's one that we're seeing a lot of technological solutions being applied to.
And lastly, just want to ask you about the future of plant protein. Do you see plant protein eclipsing animal protein and replacing it ultimately in the market?
I think that in order to be able to feed our planet's growing population sustainably, we're going to need a wide variety of different types of protein from a wide variety of sources. I think there's definitely going to be a place for conventional animal protein. Obviously, there's that process of production is land and resource intensive. So if we're going to be able to feed our growing population sustainably, we're going to need to look at ways both to make traditional animal production more sustainable and less resource intensive, and also alternatives to make sure that every new person born on this planet is able to get the amount of protein that they need and want to consume without destroying our planet in the process. So I think there's a space for all forms of protein in that dialogue.
Great. Thanks, Abby. So we're going to wrap up, and I just want to thank you on behalf of the province of Manitoba, but all of our participants in the 2021 Protein Summit. Just a pleasure having you with us today, and providing the information and the context for for looking at venture capital and non-traditional capital sources for advancing ideas at various stages along that innovation continuum. So thanks again, and it's a real pleasure having you here today.
Thank you so much for having me. It was a pleasure speaking with all of you, and please don't hesitate to reach out.